So, do I have to show it?
Then, the control of the right of use exists when the lessee has the right to obtain substantially all the economic benefit from the use of the identified assets, and on the other hand, the lessee has the right to direct the use of the identified asset. So, three key points. First, the asset must be identified. Second, the lessee must obtain the right, the economic benefits from the use of the asset. So it's the lessee that benefits from the use of the asset, and the lessee must decide on how to use the asset. Identified asset, not just reading exercise, but just to give you some more indication. The asset must be identified. In most of the contracts, this is not a problem, because when you read the contract, the first thing is the identification of the asset. Think about a lease on cars. So if there is a contract in order to use, that allows the lessee to use some cars, in the contract, the cars are explicitly identified. So it's the car, I don't know, the Fiat 500 with the plate number 123, or it's the I don't know, whatever, another car, but specified car, okay, explicitly in the contract. Think about a lease on a building or a flat. Of course, in the contract there is written exactly where the building is, which is the flat that you can use through the contract, with all the characteristics. Sometimes, and this happens in particular when the asset is under construction, so it could happen that the company signs a lease contract, but the asset, for example a plant, is under construction. So it is not possible to identify the plant in the contract, because the plant it doesn't exist yet when the contract is signed. But it is implicitly identified in the contract. Moreover, what is important, the supplier does not have the substantive right to substitute the asset throughout the period. What does this mean? Think about lease on cars. It is quite common in this type of contract that the lessor allows you a substitution of the car in case of maintenance and for repairing the cars. But this is not a substantive right, because a substantive right means that the supplier can decide anytime to change the asset that the customer is using. In the case of cars, this is not the case, because the supplier, yes, it has the right to substitute the car, but only in very particular situations, only for maintenance and repairing, for example. For repair and maintenance. Is this clear? Oh, sorry. Right to obtain the economic benefit. The economic benefit that the company has to verify to obtain are only the economic benefit from the use of the asset, not from the ownership of the asset. The lessee cannot benefit from, for example, the residual value of the asset at the end of the contract, because if the asset, the ownership of the asset, remains on the lessor, it's the lessor that can sell the asset and obtain benefit from its residual value. The lessee has the right to use the asset. So we need to focus only on this type of benefit, considering the scope of the contract. I'll give you an example. In many contracts of lease that where the underlying asset is a car, for example, there are, of course, some limitations. Limitation, for example, in terms of the total kilometers that it is possible, for which it is possible to use the car. Or, for example, it is not possible to use the car outside of the European Union. These are limitations. But this is not a problem for the definition of contract, of lease, because within the scope of the contract, you can use the car for maximum, 30,000 kilometers in 4 years. It's the lessee that can decide how to use the car. If it is better to use the car mainly in the first 2 years or mainly in the third and fourth years. Okay? So it's normal to have some limitations in the contract, but this is not a problem for the definition of lease. And of course, the right to obtain the benefit is linked to the right to direct the use. And in particular, we focus on the letter A. The customer has the right to direct the use and to decide how and for what purpose the asset is used throughout the period. Okay? And before going ahead, file Excel, I would like to discuss with you some type of contracts. In Italy, but not only in Italy, there are contracts that are named leasing or lease, is the same. Contracts with very particular characteristics. They are on buildings or plant or cars. Generally speaking, this contract, under this contract, the lessee has to pay an upfront commission, an upfront payment. Then there are installments for, 2, 3, 4, 5, 10, 11 years, it depends. And then, generally speaking, there is a purchase option. That is, at the end of the lease term, the lessee can decide to buy the asset, the building, the plant, the cars, or not. Okay? So, this is the name of the contract. These are the characteristics of the contract. And this is if this type of contract meets or not the definition according to IFRS 16. Okay? So my question now is, does this type of contract, named lease, meet or not the definition of lease according to IFRS 16, in your opinion? Is the underlying asset identified? Yes, okay, because it's a building, cars, or whatever. Does the lessee have the right to obtain the benefits from the use? Yes. Can the lessee decide how to use the building, the car? Yes. So this is a leasing according to IFRS 16. This is the easy part because for lease, substance, lease. Okay? The lease, the form coincides with the substance. And now, think about rental for a building. Building rental contract. Maybe some of you have just signed a contract in order to rent a flat, for example. Okay? Generally speaking, in most of these contracts, it is necessary to pay an upfront fee. Moreover, you have to pay installments. But building rental contracts do not provide you the possibility to decide at the end of the contract to become the owner, to buy the building. Okay? So the difference is that the purchase option is not included. But think about the definition of lease. Is the asset identified? Yes, because the building or the flat is exactly that building in that town, in that street, at that specific number. Does the tenant have the possibility to benefit from the use? Yes, because it's the tenant that uses the building, the flat, for the specified period. And the tenant, of course, can decide how to use the building. Pay attention, within the limitation of the contract. Because if you are renting a building in order to use it as your home, of course you cannot change this flat, this building, in order to, for example, make a shop. This is not possible. But within the limitation of the contract, that flat can be used only as a house for private person, for people. Within the limitation of the contract, you can decide to do whatever you want. You can decide to use only one room or 2 rooms or whatever. Okay. So, again, this type of contract, even if the name is building rental contract, it is not lease, it's rental contract. Okay? Even if the purchase option is not present, the definition of lease is satisfied. Is this clear for everybody? This is very, very, very important. Okay?
So we have to consider it as a lease.
Exactly. For accounting purposes, okay, even if the name of the contract is rental contract, for accounting purposes, it's a lease, and so this means that it is within the scope of IFRS 16. The same, for example, for car rental. Exactly the same. Also for car rental, sometimes there are upfront payments. They are not always present, but in most of the cases. Installments. There is no purchase option, but all the conditions are satisfied. The same not only for car, but also for machinery, or it is quite common not to buy, or here, okay. Most of the companies, for their employees, they don't buy the mobile phone. They rent it, but at the end, the rent of mobile phone and, in generally speaking, IC devices, again, it doesn't matter if they have or not the upfront payments, they are all leases. Is this clear for everybody? This is a very important key point. Think about car rental. If you decide to rent not simply the car, but the car with the driver, so you are interested in that case in a service, because there is the car and the driver. For in those cases, it could be a little bit more difficult to verify if there is only a service or if there is a service and a lease. Because that's true that there is a driver, but the problem is who decides to the use of the asset. For the rental of the car with the driver is not the problem, but there are some companies that rent, for example, the ships with not the driver but the crew. So they have to apply the definition of lease in order to understand if the contract is only a lease, because the company cannot decide anything. It's only interest, for example, in the transportation service. Or if the contract is a little bit more complex, so at the end, even if there is the crew, it's the company, the lessee, that decide how to use the ship, for example. In that case, it's a lease. And in that case, this means that in the contract there are two things: the lease of the asset and the service for the service of the crew. Is it clear for everybody? If not, I repeat. Okay. When you enter in a contract and there is only the asset, most of the cases the definition of lease is satisfied. Irrespective of the name of the contract, because, for example, for car, for ships, you rent a ship for 2 years, then you use your own crew and you decide where to go. There are some contracts where the companies, by signing the contract, they obtain two things: not only the ship, but also the crew. So in this type of contract, the company has to apply the definition of lease in order to understand if the company can decide how to use the ship. If the final decisions are up to the company, even if there is a crew that is an external crew that is paid by the company, this is a lease. Is this clear for everybody? Is this clear for everybody? Okay? So, in some particular contract, it could be not so easy to verify if the contract is a lease or if the contract is a service. If it is a service, for example, if you want to make a transportation of some goods from Turin to, I don't know, Beijing, in most of the cases, you enter into a service contract. You do not decide the route. You are interested in the fact that your goods fly from Turin to Beijing. This is service. But if you rent an aircraft, with the crew for 1 year, and then you can decide how to use the aircraft. Okay? So it's the company that tells the crew, okay, today you go to the Beijing. Tomorrow from Beijing you go to, I don't know, Seoul. Then you go to Sydney. Then you come back to Turin. Then the crew are not your employees. You pay for a service. In this case, this means that there is a contract that has two components. Because there is the component lease and the component service. Is now more clear? Clearer? Lease and service. Okay? In this case, we do not focus too much on the exercises, but when there are two different components, lease and service, for accounting purposes, the company has to divide the two components. And so to account the lease part as a lease and the service part as a service. Okay? Is this clear?
So I can rephrase it. If there is a contract which I, as a leaser, have a partial control or full control on the services which I get from a company, it's a lease. If I just have a contract which I pay for that and I do not have the control over it, so
control, just to be more precise, not simply the control of the asset,
yes,
but the control of the use of the asset.
Yes.
Keep in mind these details because of when we discuss the revenue recognition, control of the asset or control of the right to use asset are a little bit different. But you're true, if I control the use of the asset, this is a lease.
Yes.
Is this clear for everybody? Okay. So now that we know why, okay. Now that the definition is clear and the also the scope of IFRS 16, it's a very, very, very wide, large scope. Because not only lease contract, but also car rental, also building rentals, and so on. we need to understand how to account for leases. And as you can see, the accounting treatment is different according to the subject. For the lessee, there is only one single accounting model. Only one model. The lessee does not have to analyze a lease contract in order to understand if it is operating or finance. For a lease, the analysis that is for the lessee, the analysis that is very important is the first one. Is this contract a lease or a service? If it is a lease, it falls within the scope of IFRS 16, and the accounting model is just one. A single accounting model for all the contracts. For the lessor, the situation is different. The lessor, after the first analysis, is this contract a lease or a service? It's a lease. Okay, so it is within IFRS 16 scope. Now the lessor has to verify if the contract is either an operating lease or a finance lease. But this is something that only the lessor has to do. For the lessee, it doesn't matter. Okay? And now focus on the lessee. You enter into a contract in order to use an asset, a building or a mobile phones or plant or machinery or whatever, cars. The contract is a lease. So you have just signed the contract. Keep in mind that at the end you need to pay. Part of the money is paid immediately with the upfront payment. Some other is paid through installments. In some particular case, maybe there is the possibility, it is not mandatory, but it is only an option, to purchase the asset. But you have to pay. Do you agree with me? And if you have to pay something, in particular the future installments, this means that you have a liability, you have a debt. Do you agree? I repeat again. You sign a contract. This contract allows you to use the building, the car, the machine, the plant for a period of time, 1 year, 2 years, 4 years, 10 years, in exchange for a consideration. The consideration can be paid immediately by the upfront. In most of the contract, the consideration is paid little by little, step by step, month after month, with the installments. So at the beginning of the contract, when the contract is signed, so at the beginning, here at the inception, okay, this is when the contract is signed, you know since the beginning that you have to pay installment in the future. And the future can be 2 years or 15 years. It depends. But what is for sure, that if you sign the contract, you have an obligation to pay the future installment. And if you have an obligation to pay, this means that here at the beginning, okay, at the inception, you have to recognize a lease liability. Because I repeat again, by signing the contract, you have a commitment. You are committed to pay the future installment. So this means that you have a debt. This clear for everybody? But if we recognize a debt, a lease liability, in the balance sheet, right side, we need to recognize something in the balance sheet, asset side. So in this case, we need to understand why we have a debt. What is the reason for having a debt? We are not buying the asset, because the ownership of the asset remains, it's of the lessor. The lessee doesn't acquire the ownership of the asset at the beginning. Some type of contract does not include the purchase option, so it's for sure that the lessee is not buying the asset. The lessee accepts to have a debt towards the lessor for a reason, because the lessee is obtaining the right of use asset. The lessee, thanks to this contract, has the right of use an asset for a certain period of time. So this is an asset, the right of use. The company, the lessee, is not buying the asset. The lessee is committed to pay a debt in order to obtain the right to use the asset. Is this clear for everybody?
Yes.
Because if it is clear, now we need to verify and to understand how the lease liability is computed, and also how the right of use asset is determined. Lease liability. Go back to this slide. Okay. Here there are all the future payments. Payments at the end of, I don't know, each month, for example. Or the payments can be done once a year. It doesn't matter. Okay? There are a lot of payments in the future. A lot of payments. We need to determine the lease liability at inception. Any ideas on how to compute the lease liability today, if we know that we are committed to a lot of payments in the future?
Present value.
Exactly. The present value of the lease payments. Okay? So the first step, in order to apply the IFRS 16 model for the lessee, is determining the lease liability. And the initial amount of the lease liability, initial recognition, the initial amount of the lease liability is the present value of the future lease payments. In order to compute a present value, we need an interest rate. Do you agree? In some contracts, the interest rate is implicit. This is in particular the case of this type of contract. The lease contract, leasing contract, because look, here there is the purchase option. So in this case, for this type of contract, it is quite common for from the lessor to determine the amount of the installment using an interest. So it is quite common here to be able easily to find the implicit discount rate, implicit interest rate. Because you read the contract, and it is quite common to find this interest rate in the contract. Because the lessor, when the lessor decides the amount of installment, the lessor takes into account an interest rate. Now, if you are renting a flat, think about your contract. In your contract, it is not present an interest rate, because the goal of that contract is just to allow you to use the flat for 1 year, or in case of companies for 6 years. So for agreements that are not temporary, the regular term in Italy for building rental is 6 years. Okay? But it is not possible to find here an interest rate in the contract, because the owner of the building, its goal is completely different. Okay? And the same at the end for all the other contracts. But if we need to compute a present value, we need an interest rate. Okay? And if we need an interest rate and the implicit interest rate is not present, we need to estimate an interest rate. And according to IFRS 16, the discount rate to be used is the lessee's incremental borrowing rate. The lessees, keep in mind that we are analyzing the accounting for the lessee. Okay? The lessee incremental borrowing rate. Any idea on how to determine it, taking into account that if the contract is not present? Because the contract is in order to rent a car, to rent a building, to rent a machine. It's not a financing contract. So it is not possible to read implicit interest rate. But suppose that you are doing an internship in a company that is applying IFRS in its financial statements, and your boss asks you to determine the lessee incremental borrowing rate, because the company has to account for a contract just signed by the company in order to rent a building. Any idea on how to determine the lessee's incremental borrowing rate? Okay. Now, just 1 second. I went hit the chart. Viola is suggesting us to use the net present value and the internal rate of return. The problem, Viola, is that in order to compute the net present value and the interest rate of return, you need data that in case of a rental contract for a building, you do not have this type of data. Because you don't have, for example, the value today. Okay? Because if you want to compute the net present value, you need the discount rate. But the discount rate is not known. Ricardo suggests us to check the cost of borrowing of the company. So the company has already placed some borrowings, for example, toward banks or other financial institutions. And the first step is to verify the cost of borrowing, so the interest rate that the company is today paying for its current actual debts. Then we need to consider the new contract, so how much is relevant compared to the previous debts, and so we could ask, for example, a bank to tell us what interest rate the company should pay in order to have, for example, an incremental new debt exactly for the period and the amount of the lease that the company is going to sign. I repeat again. The interest rate that a company has to pay on borrowings depends on the credit risk of the company. Do you agree? If the company has a lot of financial debts, its risk is very high, and so also the interest rate. So the starting point is the actual cost of borrowing, the actual interest rate that the company is paying on borrowing. But we cannot use simply that cost, because that cost is for the actual debts. Now, we are looking for an interest rate for a new incremental debt. So it depends on the different companies. If the company has a very low value of debt, also the incremental borrowing rate is very, very low. If the company starts with a high level of debt, in this case, an incremental new debt would have a very high interest rate. Is this clear?
I have a question. So when we rent a house, how is that possibly be an incremental interest rate? Because it's the same amount every month.
Of course, in the case of private individuals, it's a little bit different. But, for example, if you want to do by yourself, you can imagine to ask to a bank the interest rate that you should pay in order to have a debt for 6 years, for example. If the lease term, the rental of the car is for 6 years, and you have to pay in total, I don't know, suppose 500 euros per month, so per 12 times 6 years, this more or less is the amount of the debt.
So is it that the first time I pay 500 is my first month's rent, and then they just calculate on our perception how much is growing, but actually I'm paying the same.
Yes, exactly. More or less the mechanism is the same. Of course, for companies, it's a little bit it's easier because some debts is present in all the companies. But the mechanism is exactly the one that you have described. Okay? So the company starts from its actual position of debts and the interest rate that is paid. Then another important thing, it is not the same if the currency is euro or US dollars or pounds or whatever, because the interest rate depends on the currency. Okay? So in very large group with companies that are located all over the world, it is not possible to use the same interest rate for all the lease contracts, because on the one hand, there will be an interest rate for contract denominated in euro. On the other hand, another interest rate for contracts denominated in US dollars. Moreover, it's not the same to have a contract for 2 years or 15 years. Okay? So the application of IFRS 16, it is not so easy. It's quite complex, in particular in the group, because it is not possible to identify just one single lessee incremental borrowing rate, because it depends on currency and the lease term. Of course, it depends, first of all, it depends on the position of the company in terms of credit risk, but the currency and the lease term. Is this clear for everybody? This is another example of where it is very, very important, the relationship between accounting and the finance department. Because generally speaking, all the topics linked to interest rate and so on are managed by the finance treasury department. But we are talking about financial statements. But in order to prepare the financial statements, we need this information. Is this clear? Okay, now, suppose that we have computed the present value, and suppose that the present value of the lease liability is 100. So the present value of the future installments, lease payment is 100. So 100 is the initial amount of the lease liability. What about in the debit side? If we have a lease liability of 100, this means that we have a right of use that is exactly equal to 100. Okay? So the amount of the lease liability is the most important part of the right of use asset. Think about the accounting entry. Debit side lease liability, debit side right of use asset, credit side lease liability for 100. But in the right of use asset, the amount could be different, because we need to consider also, read here, the lease payments made before or at commencement date. Do you remember here the upfront payment? The upfront payment is the payment that is done exactly at the commencement date, at the inception. Many contracts, if you don't pay the upfront payment, you cannot sign a contract. Okay? And so this means that it doesn't make sense to compute the upfront in the lease liability, because the lease liability is the present value of the future payments. Okay? In our case, if you pay an upfront payments at the here upfront payment, okay, at the beginning, at the commencement date, you do not include the upfront payment in the lease liability. You do not include it simply because it's not a future payment. You have already paid it. So this means that when you determine the lease liability, the right of use asset, you take into account not only the amount of the lease liability, but also, for example, if it is equal to 10, the amount of the upfront payment. This means that in this case, in the credit side, which is the account to be used in the credit side for the upfront payment. Debit, right of use asset. Credit, bank account, outflow of cash, because this is paid. Okay? This is an outflow of cash. So at the end, most of the cases, payments are done through bank accounts. In our exercise, you can use bank accounts or you can use cash. What is for sure, it's that there is an outflow of cash. Is this clear for everybody? The same for the initial direct costs. The initial direct costs are costs that are paid at the beginning, other commissions and so on. Then there is another part that is the dismantling, removing costs. You remember? It's similar to IAS 16. So for dismantling and removing costs, if there is this type of obligation, the company has to recognize the amount on the right of use asset. What is the other account to be used in the case of the estimate of dismantling and removing costs? Exactly, provision. Okay, provision. Oh, is this clear for everybody? So, if today the company A signs a contract in order to rent a building, the company has, first of all, to determine the amount of the lease liability. The amount of the lease liability is equal to the present value of the future payments. On the other hand, a right of use asset is recognized for an amount that is equal to the amount of the lease liability plus any payments made at or before the commencement date, plus, if any, the estimate of the dismantling and removing costs. This is the initial recognition. Is this clear for everybody? I think that we can make immediately an example. Here. Suppose so that there is company A that enters into a contract to rent a building. The commencement date is 1st of January, year 1. In our example, we mostly use 1st of January. As you can imagine, contracts can be signed in during the year in whatever day. Okay? Suppose that there is an upfront payment of, for example, 120. Then there are annual installments. Again, our exercise, annual installment. As you can imagine, when you rent a building, but it's the same also when the tenant is a company, installments are not paid annually, are paid monthly in most of the cases. For companies, it could also happen every 3 months, but it's very, very uncommon to pay annually payments. But for our exercises, it works because it's just a matter of computation. So, annual installment to be paid at the end of each period. For example, of 1,000. Lease term or is 6 years. Lease term 6 years. In order to apply IFRS 16, we need another information that is the lessee incremental borrowing rate. Lessee incremental borrowing rate. Okay? Again, in our exercise, we provide you the lessee incremental borrowing rate. In real situations, company A should estimate it according to its position, the currency, the lease term, and so on. Suppose it is equal to 3%. Okay? So, the company asks, first of all, does this contract satisfy the lease definition or not? The lease definition is satisfied because we have the building that is identified, the right to use the building, and so the company can decide how to use the building and benefit, the company can benefit from the use of the building. So the definition is satisfied. This means, as a consequence, that the IFRS 16 must be applied. Okay? And if the IFRS 16 must be applied, keep in mind that for the lessee, a single accounting model, we need to determine the lease liability and the right of use asset. Is clear for everybody? So, lease liability, we start from the payments. We know that we have a payment at inception. It is 1st of January. 1st of January, year 1. And this upfront payment is equal to 120. Then we have 6 payments. Okay, at the end of each reporting period for 1,000. And so we have 6 of these payments. Okay? Payments. Valeria, the distinction between operating and financial leases is not relevant for lessee. This distinction is relevant only for lessor. Okay? Here we are looking at company A, and company A in this case is the lessee. Okay? So the distinction is not relevant. Now, first step, we need to determine the lease liability. In order to determine the lease liability, we need to compute the present value of the future payments. Okay? So in order to determine the lease liability, only the 6 installments of 1,000 have to be considered. The discount period is 1 for the first, because it's at the end of year 1, 2, 3, 4, 5, 6. This is the discount period. Now that we have the discount period, the payment, we can compute the present value, and the present value is for each payment 1,000 times 1 plus the interest rate, 3%. The interest rate is always 3%. The first installment is discounted for 1 period. Okay? This means that the present value of the first installment is 970,000. This means that it is the same if the interest rate is 3% to pay 1,000 at the end of year 1 or 970 euros at the inception. It's the same. If I simply copy the formula, I obtain all the present values of all the future payments, and if I sum up, any question? The formula is always the same. Okay, look at the first one. 1 times 1 plus the interest at -1. If you prefer, you can compute the formula another way. 1,000 divided by 1 plus the interest rate. For the second year, it's the same. The interest rate remains the same, 3%, but the discount period now is 2. So it's 1,000 divided by 1 plus 3%, but add 2. Or, if you prefer, 1,000 times 1 plus 3%, add -2. If you do the same for all the installments, the total amount of installments is 5,570. This is the amount of the lease liability at the beginning of the contract. that in our case is 1st of January, year 1. This is the amount of the lease liability. Is this clear for everybody? How much is the amount of the right of use assets at the commencement date? Right of use asset, right of use asset, always at the commencement date. How much is?
Is the lease liability plus the initial payment?
Exactly, the amount of the liability, 5,517, plus the amount paid at the commencement date, that in our case is 120. So the amount of the right of use asset at the commencement date is 5,537. Is this clear? So this means that if we want to make the double entry record, at the commencement date, it's up to you. You can make 2 different accounting entries or just one, as you prefer. The final result is the same. You can recognize in the debit side the amount of the lease liability, and you can recognize the lease liability for the same amount. Okay. So debit, credit, and then of course we need to increase the right of use asset for the upfront payment. And this is, as your colleague had just answered before, an outflow of cash. Bank account, or if you prefer cash, it is the same, 120. Or, if you prefer, you can make just a single accounting entry. In the debit side, 5,537, and in the credit side, the lease liability for 5,417, and the bank account for 112. It's up to you. Final result is the same. In the T account, right of use asset, we have 5,537. Is this clear? Any questions? So this is exactly an application of we have just seen about the initial recognition. Okay? The initial recognition. The provision, Valeria, you mean the provision for dismantling the asset? Yes, the provision should be accounted for separately because the lease liability and the outflow of cash are towards the same subject, the lessor. The provision is an estimate that you make by your own. So the dismantling and removing costs, so the recognition of the provision, it is better to account for it separately. At the exam, for us it's the same, but from a real point of view, real situations, it is better to account it separately because it's an estimate of the company. The other two, the lease liability and the outflow of cash, have two movements toward the lessor. Okay, Valeria? Okay, now, this is the initial recognition at 1st of January. But then, we need to understand what to do at the end of the reporting period, that is, the subsequent measurement. Subsequent measurement, once recognized, the right of use asset and the lease liability have two different subsequent measurements. They are accounted for separately, and in particular, the right of use asset is an asset. It's not the building. It's the right to use the building for 6 years. But at the end, it's similar. This means that we have recognized a right of use asset of 5,537, if I well remember. This is an asset because we have the right to use the building for 6 years. So this means that we need to depreciate. We need to depreciate the right of use asset, and generally speaking, for contracts like rental of building and so on, the depreciation is done over the lease term. So for rental of buildings, rental of cars, and so on, rental contract, the depreciation is done over the lease term. So, this means that in our case, at the end of year 1, we need to account for the depreciation. And the depreciation is, in this case, over the lease term. That is over 6 years. So we have depreciation of right of use asset in the debit side. The total amount of the right of use asset is 5,537. Okay? So this means that we need to compute all the amounts that we have recognized, recorded in the T account right of use asset. Okay. Keep in mind, accounting entries are a way of obtaining the figures that we want to disclose in the financial statements. Okay? So the right of use asset, debit side, 417 plus 120, or if you prefer, 5,537 divided by 6 years. So the depreciation of the right of use asset is 922. What about the T account to be used in the credit side? What's the name of the T account in your opinion? If this is the depreciation, we have the accumulated depreciation of right of use asset. Okay? And in this way, at the end of year 1, we have charged the income statement for a cost of 922. And in the balance sheet, the right of use asset has been reduced for the amount of the accumulated depreciation, 922. But this is only for the right of use asset. If there are any questions, any, is there anything clear?
No, I had a problem with the depreciation, but I got it, thanks.
Okay, the depreciation is the amount of right of use asset, this amount, over 6 years. That is the lease term in this case. Lease liability. The lease liability, at the end, it's a liability, as all the other liabilities, as a mortgage. And so this means that the amount that is paid, in our case, the amount paid is 1,000 at the end of year 1. Okay. The amount paid must be divided into 2 parts. Because when you pay an installment, for example, for a mortgage, this installment is for 2 things. First, in order to reduce the amount of the debt. And second, for the interest. Or probably it's better for you the opposite. Part of the amount paid is for the interest, and the remaining part is for reducing the debt. And we'll see immediately using our exercise. We start with the initial amount of the lease liability. So at the beginning of the period, the lease liability has an amount of 5,417. Do you agree? How much is the interest rate that we have used in order to discount the future lease payments? How much is? 3%. Okay? So, we know that for period 1, the interest expense to be recognized in year 1 is 3%, because this is the interest rate, applied to the initial amount of the lease liability. Do you agree? Because if our debt is for 5,417 at the beginning of the period, we need to pay an interest rate that is 3% on this amount, and 3% on the initial amount of the lease liability is equal to 162. 162 is the interest rate for year 1, determined using the interest rate 3% applied to the initial amount of the lease liability. How much is the amount of installment paid? Installment paid at the end of year 1 is 1,000. Look, the amount paid at the end of year 1 is 1,000. So, we pay 1,000, of which 162 for interest, the remaining part, in order to reimburse the debt. So, of which interest 162, and the remaining part reimbursement of the debt, of the principal of the debt. So the remaining part 837 euros. Okay? Because we know that we pay 1,000 for two things, for the interest and for the reimbursement of the principal. We know the amount of the interest, 162, because this is the 3% of the initial amount of the lease liability. The remaining part is the reimbursement of the principal. So, what about the accounting entry in order to record the payment of 1,000? What is the accounting entry? How much is the outflow of cash? How much is the outflow of cash? This is a question also for students at home. How much is the outflow of cash? 1,000. Okay? Outflow of cash are recorded in the credit side. Okay? So, debit, credit. Outflow of cash or bank account, if you prefer. Credit side, 1,000. Why is the company paying 1,000? Which are the reasons? Interest. Okay. So interest expense. The interest expense is recognized in the income statement. 162. And the reduction of the lease liability. Of course, the lease liability is a liability, so it is in the balance sheet for 837. Is this clear for everybody? Any questions? So in the balance sheet, year 1, we have the right of use asset at an amount that is equal to the initial amount of the right of use asset minus the accumulated depreciation. We are at the end of the first year, so we have only 1 year of depreciation. In the income statement, okay, we have the depreciation of right of use asset. The depreciation is a cost, and the depreciation is 922. Moreover, we have the interest expense, again a cost of 162. Is this clear for everybody?
How about the liability side?
Sorry, I forgot it. So, we have also the liability, thank you. Of course, in the right side of the balance sheet, or if you prefer, if it is clear for you here, okay? Lease liability. And the total amount of the lease liability is the initial amount of the lease liability minus the amount reimbursed. So the amount, the lease liability after paying the first installment at the end of year 1 is equal to 4,579. Is this clear for everybody?
Bank account,
So
cash, bank account.
if you want, you can show it. In the case of the lease liability, I forget it. Okay? I forgot. But in the case of cash, for me, it's not necessary. Because the bank account of cash are affected by a lot of movements. Okay? So if you want, you can show it. But please don't write the minus 1,000 and nothing else. Because minus 1,000 is one of the thousands of movements of that bank account. Okay? So for example, you can write that you don't know the initial amount, the initial balance of the bank account, and we know that there is an impact of 1,000 here, if you want, but for me it is not necessary. Okay? If we want to prepare the financial statements, in the financial statements there is also the cash flow statement. Okay? And in the cash flow statement, keep in mind that we have the operating activity, the investing activity, and the financing activity. Okay? Look now and look for cash movements. Here, 120, okay, and here, 1,000. 120 was because the upfront payment done at the inception, at the commencement date. Okay? And this is done in order to invest in the right to use asset. So this is here, payment for upfront for leases. I repeat again, because this amount paid at the beginning, 120, is because of an investment that the company is doing. The investment in a lease, in a right of use asset. Okay, so payment for leases. Then there is another outflow of cash, 1,000. This 1,000 is for two reasons: interest expense and lease liability. You will discuss more in detail the cash flow statement during the second part of the course. But generally speaking, payments for interest are shown in the operating activity. So the payment for the interest is 162. It is mandatory to show the payment for leases, but in this case is the reimbursement of the lease within the financing activity, because the company has a debt and the company is reimbursing the debt. Okay? So the cash outflows of 1,000 in the cash flow statement is presented in two parts. the payment for interest within the operating activity. This is not mandatory, but this is the option that is most chosen by companies. The reimbursement, on the other hand, it is mandatory to show the reimbursement in the financing activity, because this is the reimbursement of a debt. Is clear? Financing activity, the financing activity will find all the inflows and outflows due to movement in debt.
The payment of lease is minus or plus?
Minus all payments. Minus. This is payments for lease, to be more precise, upfront. Okay? Again, it is mandatory to use this category. Mandatory to use this category. This is optional. Okay? Otherwise, it would be possible to use financing activity, because this is a payment due to a debt, but the most common presentation of interest paid is within the operating activity. Payment for interest, or of course, if you want, it is quite common in the cash flow statement to read interest paid. Is this clear? Do you need a break? Oh, 20 minutes of break. After the break, we will continue, because I would like to show you also the year 2, 3, 4, 5, and 6 until the end, so that you can have the clear picture of everything. Okay? 20 minutes of break.
Just watch my phone for 5 minutes.
I think it's because the last week Claudia, remember the girls told me that maybe today and tomorrow we want to come here, and maybe like Wednesday or Thursday we have a 2 hours break for example like Thursday. Maybe we can discuss it together to which part, maybe this part and this part, we decide.
To be like that.
Yeah. And first we also we need to download the financial statement of the, but I have doubt with that because I checked and I normally see that every 3 months they publish the statement.
Yes.
Yeah, so I'm not sure which one we need to use to for these things. Maybe then we can talk to
Discuss it with the professor. Yeah, we can discuss it with the professor.
Yeah, maybe. Maybe we can use the last one for example. But actually, I think the other groups they have only the financial statement, maybe only for the year, but ours is a little bit different. So yeah, you're right. Maybe you can ask her.
They come consider those financial statements or show it to the professor.
So which one maybe is the best that we can use for the discussion?
Because whatever we are going to do the presentation.
Yeah.
It doesn't matter. It's like semi-annual, annual.
Yeah. Actually, it's just
I'm having a lot of things to do.
yeah, I think so. And also we need to publish it with 14 October. So actually we don't have many times.
We don't have time.
Yeah. Maybe we can see tomorrow if they come here because today I think maybe they need to do the prepare so they can come here. Yes. It's not there. And maybe if they come tomorrow, or maybe we can discuss in the group and
Because you know other persons.
Yeah.
It's at the time
Yeah.
come here.
like last week. Last week I talked to Claudia and she said maybe this week or Wednesday or maybe just is a presentation at 10 minutes or 2 minutes.
Yeah.
I remember that the professor said that we need to start at the brief description. Yeah, and then maybe the layout and stuff.
What's the teacher?
Yeah. Because the financial statement is like 300 pages, then you need to take the things more and stuff. Yeah, and maybe this one is going to be like the any purchase, some of those things is like the bonus. So maybe we can do Yeah, and maybe you can decision confront it. I don't know, but confront with any financial statement. If they are similar, maybe you can also take some, some words.
That's a proper
Yeah. That's a good thing. Let's see. Because actually I have no idea of this kind of work because I never had this much so a little bit, but let's see.
Yeah.
Because I think all of our lessons, maybe all have group things. So let's see. I hope it's a good start. Yeah. We start as always difficult things, but when we start, maybe more. Otherwise, we'll go better. Suggest of the financial statement, which minutes start states, last of the year, I think it's C. So the same is here I have the annual report. So but this one is this year. This one is the last year. So this year we need vice Yeah. Maybe we can. Yeah. Go ahead.
Everything about the precourse is management. And now I give you some. Okay, we can start again. And as I told you before the break, I would like to complete the exercise with all the 6 years, because only this way, in my opinion, you can have the complete picture, and probably it is easier to understand the mechanism of IFRS 16. And so we have I don't repeat all the accounting entries, okay, because the accounting entries at the end are always the same, at the end of year 2, 3, 4, 5. In particular, the accounting entry of the depreciation is always the same. The accounting entry for the payment of installments is similar, not identical, because the bank account is always 1,000. But of course, the amount of the interest expense is different. So now I complete here the balance sheet, income statement, cash flow statement, in particular balance sheet and income statement for year at the end of year 1, 2, 3, 4, 5, 6. So we have balance sheet, the right of use asset. In the balance sheet we have the lease liability. In the income statement we have the depreciation of right of use asset. And in the income statement we have the interest expense on the lease liability. Okay, so these are the 4 important the 4 important items to be disclosed in the financial statements. And the right of use asset, we can start from the depreciation. Depreciation, we know that the depreciation is the amount of the right of use asset divided by 6 years, in this very particular and easy case. Okay? The depreciation without changes in the useful life and so on, as you can imagine, the depreciation remains the same for all the 6 years. If the lease, the contract lease is not modified, if the company continues to use the building as originally intended. So the right of use asset at the end of this year is the initial amount minus the depreciation. 1,614. This is exactly the amount that we had showed before in the balance sheet. At the end of each reporting period, we need to take into account another year of depreciation. And if you continue until the end, of course, at the end of year 6, the right of use asset is equal to 0 because it is completely depreciated. Is this clear for everybody? Then, the interest expense. Just to give you the whole picture, I put here also the amount at the beginning of January of both the lease liability and the right to use asset. Okay, this is the amount of at the end of January, at the beginning of January, when the contract is signed. Then, okay. And then in yellow, the amount shown in orange, the amount in the financial statements. What about the interest in the income statement of year 1? We told before that the interest is always computed using 3%, and for the first year, the interest is computed on the initial amount of the liability, 162 euros. This is exactly the amount that we have computed before. Okay? 162. You remember? So look, the amount of the lease liability at the end of the period is equal to the amount at the beginning of the period minus the principal reimbursed. And the principal reimbursed is the difference between 1,000 and the interest paid. If I'm not wrong, 4,579 is exactly, where are you? Here. The amount that we have determined before the break. Okay, I repeat again. The amount at the end of year 1 is the amount of beginning of the period minus the amount reimbursed. The amount reimbursed is 1,000 minus 162. Is this clear for everybody? Students that are at home, is this clear? Okay, thank you Ivan for your feedback and Gloria. Now, we do the same for the year 2, but in year 2, look the formula. Okay? The interest rate is always 3%, but 3% on the initial amount of the debt. And at the beginning of year 2, the initial amount of the debt is the amount of the debt at the end of year 1. So the interest to be recognized in year 2 is equal to 127. So the lease liability is the lease liability at the beginning of the previous period minus the amount reimbursed. And the amount reimbursed is the difference between 1,000 and 137. In the second year, we pay always 1,000. But since the amount of interest is smaller, the amount of principal reimbursed is higher. And if I copy the formula until the end, as you can see, the lease liability at the end of the report of the last year is equal to 0, because after the payment of the last installment, we do not have any other commitments, and so the lease liability is equal to 0.
Professor, you said that before asset is bigger than liability. Before IC is asset because you paid the upfront payment. So asset part.
The asset part does not depend on the payment.
Yeah, I know, but the asset, the number shouldn't be, liability is 5,537 and asset is 5,470.
Assets and liability, they have two different amounts. Okay? For two reasons. First, because at the beginning, since the beginning, the two amounts are different. And second, because the asset is depreciated and the depreciation is on a straight line basis. Whereas for the lease liability, the reduction is lower at the beginning and then higher and higher, step by step. Because here, if you occur. Okay? If we look at the cash flows, installment paid. Installment paid is always 1,000. But the interest is higher at the beginning, lower, step by step, year after year. So, this is the interest paid, the reimbursement of the lease liability is always the difference between the amount paid and the interest. So, as you can see, the right of use asset is decreasing each year for the same amount, the depreciation. Whereas for the lease liability decreases each year for an amount that is not always the same, but is growing. Okay? This is an effect of the fact that lease liability and right of use asset, once recognized, they are on two different directions, so parallel directions. They do not intersect. Is this clear for everybody? Okay. I will post this file. I suggest you to try to change something. For example, if you change the interest rate, keep in mind that the discount rate depends on the situation of the company and depends on the length of the lease term. It depends on the currency. If the discount rate is 6% instead of 3%, as you can see, figures are different. Okay? If the upfront payment is not paid at the beginning, as you can see, right of use asset and lease liability have the same amount. If the upfront payment is not present, but then the amounts are different. They are equal only at the end. Only at the end of the reporting period, only at the end of the lease term, because only at the end of the lease term, the right of use asset is equal to 0 because it is completely depreciated, and the lease liability is equal to 0 because we do not have any other commitments. Okay? Any questions? Few things. First, the lease term. The lease term in the exercise that we have just discussed together, the lease term was equal to 6 years. 6 years was the term of the contract. Okay? IFRS 16 states that companies need to assess also the options to extend the contract and the options to terminate the contract. Okay? So the lease term, the starting point is the term of the contract. But in some contracts, there is the possibility for the lessee to exercise an option in order to extend the contract. For example, in Italy, for rental of buildings, so for building rental contract, it is mandatory not for temporary contract of 1 year, okay? But for regular contract, it is mandatory to have 6 years, but plus the option that it is the tenant that can exercise the option of other 6 years. Option to extend. Okay? It's up to the lessee to decide to extend for other 6 years or not. IFRS 16 requires the company at the inception to verify if it is reasonable, certain or not, to exercise the option. And if the company considers the reasonable, certain to exercise the option, the lease term is 12 years since the beginning. I repeat again. The exercise that we did together, we consider 6 years, that is the term of rental contract for buildings. But in Italy, and also in other parts of the world, it is mandatory to allow the lessee, the tenant, to decide to extend for other 6 years the rental. The decision is up to the lessee, to the tenant. Okay? So on January the 1st, year 1, the company has to assess the probability to exercise or not to exercise the option to extend for other 6 years. If the building is for the headquarters with administrative office, I can assure you that companies always consider not reasonable, certain to exercise the option, because it is very, very, very easy to relocate administrative offices. Okay? So if at the end of the last year the company would find more convenient contract, it is not a problem to relocate everything. But if the building is not a building of administrative office, but suppose it is the building where there is the factory with machinery, plant, it is not so easy to relocate machinery, plant, and so on. So in that case, it could happen that since the beginning, the option to extend the contract is considered reasonable, certain. The mechanism is exactly the same. The only difference is that starting from the inception, we do not consider only 6 years, but we consider 12 years. Is this clear for everybody? Valeria, this is how the contracts are written according to the law, so 6 years plus 6 years. Then, of course, it is possible for a company to extend for 6 years and at any time to decide to terminate the contract. But if you decide to terminate the contract before the expiration of the term, generally speaking, you have to pay a penalty. Okay? So it is mandatory for the law, it's the law that in order, on the one hand, it's for the lessee to have the possibility to extend for 6 years. But on the other hand, also the lessor, well, it's for the lessor that the minimum term for the extension is 6 years, because it's it could be a damage for a lessor to have the renewal option only for 1 year. Okay? This is the general rules. Then it is possible to have some very particular situations where lessor and lessee could find another agreement in order to extend the contract. For example, if the company is looking for another location and needs only 1 year. But according to the law, the minimum term is 6 years. This is for the protection also of the lessor. Okay, Valeria? Okay, and this is one of the two things that I would like to highlight. The lease term, in most of our exercises, it will be very, 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 very easy. But in real contract, it is more complex because when there are options to extend the contract or to terminate the contract, it's up to the company to assess how reasonable it is to exercise or not to exercise these options. Okay? Then, another particular situation is that of the presence of purchase option. I hope you remember that at the beginning of the lecture we discussed the case of contracts that are named lease in the contract. And in this contract there is also the purchase option. The purchase option means that the lessee can decide at the end of the lease to pay an amount and to become in this way the owner of the asset. Okay? It is not mandatory. It's up to the lessee. So at the beginning, at the commencement date, the lessee has to assess how probable it is to exercise or not the option. So at the end there are two different situations. If it is reasonable, certain to exercise the purchase option, there are two different consequences. First, the purchase option is considered as a lease payment. So it's taken into account in order to compute the amount of the lease liability. Because it is almost certain. So when the lease liability is computed, the company has to take into account not only the future installments, but also the purchase option, but only if it is reasonable, certain to exercise it. Then there is another consequence. If the lease liability includes the purchase option, also the right to use asset includes the purchase option. And if it is reasonable, certain to exercise the first purchase option, the depreciation is not done over the lease term, but the depreciation is over the useful life of the asset, because it is almost certain to become the owner of the asset. Is this clear for everybody? Of course, if it is not reasonable certain, to exercise the purchase option, in this case, the purchase option is not considered when the lease liability is determined, and as we have done in our exercise, the depreciation is over the lease term. The period for the depreciation is the lease term. Is this clear for everybody? Veronica, when I'm reasonably sure that I extend the contract 6 plus 6, I compute the statements in the beginning with 12 years. Exactly, 12 years. Since the beginning. If you are reasonably sure at the beginning. Okay, Veronica? Of course, it is possible to start with 6 years if at the beginning you are not sure. But then, if at the end of the 3rd year you change idea, at the end of the 3rd year you should adjust both the lease liability and the right of use asset in order to consider the extension. Okay? Now our exercise, do not worry, we consider only 6 or 6 plus 6. Okay? But in real situations, the application of IFRS 16 is very, very, very complex because it is not enough to analyze everything at the commencement date. But it is necessary to follow the contract because maybe at the inception, at the commencement date, the option to extend the contract is considered to be not reasonable certain. But after 3 years, it could become reasonable certain. And so at that period, it is a mistake to wait the end of the 6th year. You need to consider the new information, the fact that now, after only 3 years, it has become reasonable certain the extension of the contract, so you have to change both the lease liability and the right of use asset. No exercises on this, but this is a very complex aspect that companies have to manage. Think about companies like big groups. They rent buildings, they rent cars, they rent mobile phone and other ICT stuff. So a lot of contract, not so easy to in operating terms, to administrative terms, to follow everything. It's a very, very, very complex standard to be applied. Is this clear for everybody? Then I don't remember. No. So there is another thing that I would like to highlight that are short-term lease and low-value lease. Short-term are lease with a lease term that is lower than 12 months. And low-value lease are lease that has the underlying asset with a value that is low. Low is more or less $5,000 US. This is 12 months is a mandatory term. $5,000 is just an indication, a suggestion of the standard. Okay? So as you can imagine, when the lease term is very, very short, 3 months. Or when the underlying asset is very, very low, this mechanism to account for the lease liability, the right of use asset, that to compute interest expense, and so on, could be very, very expensive in terms of time. But on the other hand, the information is not so useful because amounts are not material. Okay? So for short-term and low-value lease, if there is the possibility for the lessee not to apply the right of use accounting model. Okay? So the lessee can decide not to apply the right of use asset model. Okay? And in this case, simply payments are recognized as a cost in the income statement without distinction of depreciation, interest, and this is done on a straight line basis. Okay? This is just to simplify IFRS 16 implementation. Otherwise, imagine how many contracts there are for mobile phones in companies, or also laptop, and so it could be very, very expensive to follow, to implement IFRS 16 for all these assets. But at the end, since the amounts are very, very low, the information is not useful because it is not relevant, not significant. Okay. Any questions? It is not mandatory, but it is an option, and that, as you can imagine, it's something that is wide used by companies because it's a relief, when this standard is applied. Okay. Any questions? So before moving to lessor, I would like to have a look with you at E&I financial statements. And in particular, page 188. This is the balance sheet. And here, right of use asset. Do you remember the first lecture when we discussed the fact that these are assets similar to property, plant, and equipment? But now you are able to understand the meaning. The right of use asset, 4.6 billion. This is the asset for the right to use tangible assets thanks to lease contracts. So they are not property, not land owned, but buildings and other assets used thanks to the lease contract. If we go to page 205, here there is the narrative description of leases. No, Valeria, it is not mandatory to disclose separately the right of use asset. In fact, if we offer British Petroleum, that is a competitor of E&I, and if we go to page 100, this is, I don't know why here, okay, just 1 second. Oh, As you can see, this is British Petroleum. British Petroleum uses lease contract, but as you can see here, we don't see separately in the balance sheet the right of use asset. They are within this line, property, plant, and equipment. What is mandatory, Valeria, if the right of use assets are not separately disclosed in the balance sheet, it is necessary to disclose them in the notes. And now in a few minutes, we will analyze also British Petroleum in order to understand the information provided in the notes. Here it's any P&I again, and all these parts is about the definition of lease. This is exactly what I reported in the slides. The analysis of what it is necessary to do at the commencement date. Read here, the right of use asset is initially measured at an amount that is equal to the amount of the lease liability, any initial direct cost, any lease payments made at or before the commencement date, and the estimate of removal and so on. Okay? So this part is exactly the analysis, the description better of what we have discussed together this morning. If we go to the slide, to the page 228, this is the note number 12. In the note number 12, there is the breakdown of right of use asset and lease liability. And here we can see the total amount shown in the balance sheet, 4,006,000,000. This amount is composed of gross amount and accumulated depreciation. Keep in mind what I told you last Friday. Right of use assets are tested for impairment if there are indications of losses. Okay, so accumulated depreciation and accumulated impairment. The initial amount was 5.3 billion. Additions means new contract. New contract signed in 2020, and so the right of use asset increased of 808 million because of new contract signed in 2020. Then depreciation 928, impairment losses due to some difficulties in recovering some right of use assets. Currency translation differences. This is something that is always present because keep in mind, this is a consolidated financial statement. So it's the sum of all the right of use assets, not only the ones shown in euros, but also the ones that are denominated in dollars, pounds, and so on. And then other changes. Okay? Other changes here, somewhere, there is written, I read it, now I am not able to find it again, but other changes are due to changes in extension of of the contract, modification in the contract. Generally speaking, other changes are modification in the right of use asset due to the modification to the contract, or, for example, a new consideration of the options to terminate or to extend the contract. Now, look at the type of assets. E&I has a very particular, operates in a very particular industry. And as you can see, the most important part of right of use asset is due to a very particular type of assets. Yes, it is necessary to turn the heads. Floating, production, storage, and offloading vessels. These are vessels. Vessels, very big vessels, in order to store the oil, store the gas, and offloading vessel used by E&I. As you can see, 2.6 billion of right of use assets due to this very particular type of assets. This is, of course, typical of this business. Then there are others, drilling rigs. So, in order to drill to obtain the oil. Other naval facilities, motorway concessions and service stations. Italian students, motorway concessions and service station. Are you able to see this type of lease contract? Do you have a car or a motorbike? If you have a car or a motorbike, you need to fuel the car and the motorbike. E&I has a lot of stations. These stations are placed on public routes, and so E&I has to pay, has rental agreements. Okay? So this is the amount of the right of use asset for all the rental agreements signed by E&I in the motorways, highways, and in the service station. Oil and gas distribution facilities, and as you can see, buildings and vehicles. In the case of E&I, buildings, they have an amount of 652 million. But it is big, but of course not big as the vessel for the storage activity. Okay? And so in the case of E&I, the leases are used in order to for many type of assets. And in the case of the contract for the vessel, as you can see here, there is another important information, because in 2020 E&I signed a contract, but for an asset that is not yet available at the end of 2020. And as you can see, look at the nominal amount of this asset. 1.7 billion that is expected to be deployed in Mexico, accounted as a right of use asset in 2021. Look at the maturity at the lease term, 19 years. Okay? So a very long lease term. And then there are also other type of leasing signed in 2020, but not recognized in the right of use asset because the asset is not still available, was under construction. Okay? And then read this last sentence. The main future cash outflows potentially due, not reflected in the measurement of the lease liabilities refer to options for the extension or termination of lease of office buildings for 302 million. What is the meaning? The meaning is the following. E&I has the possibility to extend some lease contract, but right now these extension options are not considered reasonable certain. So this 302 million is not included in this amount. But this is a very important information for users in order to have the complete pictures. Okay? So this amount is not included in the right to use asset and in the lease liability because E&I considers not reasonable certain the extension of this option. What if, starting from a certain period, these options will become reasonable certain? How much is the commitment for E&I? 302 million to be added to the lease liability already recognized. And the same service station, other 148 million, and other minor leases. So make a computation, 302 plus 148, it means 550 plus another 100, so 650 millions of potential commitments that are not reflected in the balance sheet because options are not considered to be reasonable certain. But for the users, it's very, very important because this, of course, they are not reasonable certain, but they are still there. What about the lease liability? The lease liability is described here. The amount at the end of the period was 5.6 billion. At the beginning of the period. At the end of the period, 5 billion. In the balance sheet, if I go back to the balance sheet, liabilities, current portion of long-term liability. Where are you? Long-term liability. Okay? So this is the total amount of the lease liability. But part of the amount is due by the end of the next reporting period, current portion. The other part, 4 billion, is due in 22, 23, 24. Okay, so the lease liability in our exercise, I simply presented the lease liability as a whole amount. But in the balance sheet, the lease liability must be split in two parts, current and non-current. And you will have the opportunity to do this in the exercise for tomorrow afternoon, in the exercise hours. And again, look, additions means increase in the lease liability because of new leases. Decreases means payments, reimbursements of principal for 869 million. Then other changes, and it's probably written here, exactly. Other changes in the right of use asset and lease liability are related to early termination or renegotiation of lease contract. Is this clear? In the case of E&I, there is a quite long and detailed description, also because they are quite important. At the end, 4.6 billion out of 109 of total assets. If you compute the right of use asset to the property, plant and equipment, 9%, more or less, 8% of tangible asset is used under lease contract. Different situation, presentation at least for British Petroleum. In the case of British Petroleum, right of use assets are not presented separately in the balance sheet. And the same in the liabilities, as you can see. But if we go to page 109, page 109, there is the note 12 about property, plant, and equipment. Look at the description. This is the description of the cost, but only of the property, plant, and equipment owned. So these are the property and plant and equipment owned directly by British Petroleum. The same for the depreciation. Then, look here. The total amount in the balance sheet of property, plant and equipment is not 106 billion. 106 billion is the net carrying amount of owned property, plant and equipment. In the balance sheet, the amount is 114. Why? Because there are 8.6 billion of right of use asset. Is this clear? It's another way of presenting the information. Less detailed if you want, but it's another way. Okay? So if I go back to the consolidated financial statement of British Petroleum. Here, okay, 114 billion, of which now we know 8.6 of right of use asset, and the remaining part, 106 property, plant and equipment owned by the company. Is this clear for everybody? Any questions? So someone during the weekend sent me an email asking for information on how to present, how to analyze the consolidated financial statement in order to prepare the project work. So first, right now, it doesn't matter the fact that you are analyzing consolidated financial statement, because right now we have discussed the documents, balance sheet, income statement, cash flow statement. We have discussed property, plant and equipment, intangible asset, and lease. Okay? So, and the accounting policies, they don't depend on the fact that you are analyzing a consolidated financial statement. So it doesn't matter. Okay? So you have to download financial statements and you have to start to read the balance sheet. Probably in the balance sheet there are no peculiarities, but I don't know, maybe in some of your cases there are. The income statement, as we discussed together, income statement is depends on the business and on the company. So it could be a good idea to read the financial statement and to understand if costs are presented according to the nature, the function, if there are intermediate results, and if there are, what type of intermediate results. Cash flow statement is not so important right now because you will have the opportunity to study it more in details in the second part. Then property, plant and equipment. Read the narrative part. In most of the cases in the narrative part there are no useful information for you, but sometimes maybe some information is available. Then you look at the table, the chart, in order to understand the movements, the deposition, the presence of the impairment test, that is very important. The same for intangible asset, for the impairment test, and for the lease. Of course, you will have only 10 minutes, so it is not possible to present everything. You have to choose, okay? And the choice depends on the type of company that you have. If property, plant and equipment are very important for that company, it makes sense to present the accounting policy for property, plant and equipment. If not, it doesn't make sense. Right of use asset and lease liability, it depends on the type of the company. Is this clear for everybody? So now, little by little, you have to verify the topics that we have discussed together, how they are applied in practice in your case. Then you have to decide if in your particular case the topic is important or not, in order to decide if it is the case or not to present it during the discussion. Have here, and the same Alberto, but in particular for this part, since I am directly involved in the explanation of financial statement, I'm here in order to answer to all your questions. So starting from tomorrow, I expect to meet some of you with questions, because I can assure you that it's impossible that you are able to understand everything about the topics that we are discussing simply by reading the notes, because the companies assigned are very big companies, okay? Sometimes with very detailed notes, some other with very synthetic notes, okay? So I kindly suggest you to start working and then to make questions, okay?
It's possible to use the semi-annual report.
I prefer not that you don't use the semi-annual report for a reason. The semi-annual report is not a complete document in terms of notes. So the notes in the annual financial statements must be a complete note with everything. In the semi-annual, companies can omit some part of the notes because they simply state the accounting policy is the same as the accounting policy at the end of the reporting period, so I don't repeat it, and you have to read the annual financial statement. So it is better to work on the annual financial statement 2020 in most of the cases, if it depends on the reporting period. If the reporting period starts on 1st of January, the annual report is the one at the end of December. Otherwise, if some of you as companies with the reporting period that starts at 1st of April, in this case, you have to analyze the statement at the end of March 2021. It depends on the different situations. Okay? But in the semi-annual report, you don't find all the notes. Since it probably is the first time that you do an activity like this, it is better to start from the annual report. Okay? Other questions about the project work? Okay, no questions. Few things about lesson. Yes, but I have to, to share for students that are at home. The lessor. The lessor is the owner of the asset. And for the lessor, the distinction between operating lease and finance lease is important. And so companies, lessor, they have first of all to verify if the lease is an operating lease or a finance lease. IFRS 16 starts with the definition of finance lease and states that a finance lease is a lease that transfers substantially all the ownership, risk, and rewards to the lessee. Risk of ownership includes obsolescence and loss on sale. Rewards includes use of asset and gains on sale. So IFRS 16 defines the finance lease. If a lease is not a finance one, this means that it is an operating one. It's very difficult, sometimes it's very difficult to verify if a lease is a finance lease or an operating lease. So we'll go back just for 1 second. Finance lease means that at the end, even if the ownership is not transferred, since the risks and rewards are transferred, at the end it's like the lessor has simply made a sale. Because if it is a finance lease, this means that the lessor is acting as the seller of the asset. So the asset is de-recognized. The asset is de-recognized from the balance sheet, and the lessor simply recognizes a receivable. Finance lease, risk and rewards of the ownership are transferred to the lessee. The lessee at the end, even if the form is that of a lease contract, the substance is that of a sale. So the asset is de-recognized, and of course the lessor has a receivable towards the lessee. For the operating lease, the assets remain in the financial statement of the lessor, remain there, and installments are simply recognized in the income statement as an income on a straight line basis. This is the general statement. Because if the lease is a finance lease, even if, I repeat, the form is a lease, but the substance is like a sale. So the asset is derecognized and the receivable is recognized. The operating lease is completely different. The asset, the building, the property, or whatever, remains in the balance sheet of the lessor. It is depreciated, and the installments received are recognized as an income over the lease term. The problem, as you can imagine, is the distinction. Okay? Because this definition is a very high definition. Risk and rewards are transferred to the lessee. Good. But then, in practice, when I have a contract and I have to decide if it is an operating or finance lease, it would be not so easy. For these reasons, there are some indications in the book. They are all explained. But with you, I would like to highlight only two of these. And in particular, we start with the lease term. Lease term. Suppose that we are analyzing a contract. Keep in mind that we are the lessor. Because of the lessee, this distinction doesn't matter. Okay? We are the lessor. And suppose that the lease term is for 2 years. But the asset is, I don't know, a car or another asset. The useful life of the asset, suppose, is 6 years. Okay. So, a lease is a finance lease if risks and rewards of the ownership are transferred to the lessee. This asset has a useful life of 6 years. The lease term is only 2 years. After the 2 years, the asset is returned back to the lessor. It's very difficult to say that risks and rewards are transferred to the lessee if the lessee uses the asset only for 1/3 of the useful life. Do you agree with me? The lessee uses the asset for 2 years out of 6 years of useful life. So, for 2 years, the rewards due to the use are, it's the lessee that is using the asset. But for the other 4 years, it's again the lessor. And the lessor, after 2 years, has again the asset there, and the potential gain or losses from the sale of the asset remains on the lessor. Is this clear? This case? So this is, for sure, an operating lease. Now, I make copy and paste. Suppose that now the lease term is for 5 years and 6 months. 5 years and 6 months. A very long period. So the useful life of the asset is 6 years. And out of these 6 years, for 5 years and 5 months, the asset is used by the lessee. So it's the lessee that can benefit from the use of the asset for the majority, the major part, the majority of the useful life of the asset. Is this clear for everybody? So at the end, if we look at this second type of contract, at the end it's the lessee that uses the asset for most of the useful life of the asset. So in this case, we can say that this is a finance lease because the rewards are transferred to the lessee. Not only rewards from the use, but also risk. For example, the risk of obsolescence, because the contract is for 5 years and 5 months. If there is some problems, for example, in terms of technological innovation, the problem is of the lessee. Is this clear for everybody? In these two cases, it's very clear that the first one is an operating lease and the second one is a finance lease. IFRS 16 states that, generally speaking, when the lease term covers the majority of the useful life of the asset, there is the lease is expected to be a finance one. I have a question for you. What is majority? She's saying more than 55. 75. This means principal based. Do you remember the first day of lecture when I told you that IFRS are principal based, whereas US GAAP are rule based. Principal means majority. It's up to the company to decide if majority is more than 50%, more than 70%, and so on. US GAAP, they have a similar accounting treatment, but under US GAAP, since they are rule-based, there is a written majority, but there is a percentage, and the percentage is more than 75%. Okay? This is under US GAAP, but since this is the accounting treatment at the end is the same, a lot of IFRS company, they uses this threshold 75% in order to classify a leasing as operating or finance, even if within the standard there is written majority. It is not possible to read 75. But since the US GAAP, they use 75, most of IFRS companies, they do the same. Okay? Is this clear for everybody? I don't know if there are any questions. Otherwise, we can end the lecture here. This afternoon at 2 o'clock, some of you have the pre-course exam.